So the wild week continues on Wall Street as investors get a serious case of whiplash. The Dow Jones rocketing over 1,000 points yesterday, its biggest single-day point gain ever, as it rallied from a historic Christmas Eve plunge. Today, a totally different story, with stocks nosediving down about 418 points now. A top Trump administration economist insisting the overall economy remains strong.
All the anecdotal information we're getting is that the fundamentals remain extremely sound, that Christmas sales are through the roof. So I think that the momentum that we saw this year is carrying forward to next year.
Here to talk about this is Mitch Rochelle, a partner at accounting giant PwC. So you look at this all the time. The fundamentals are strong. So is this just a blip?
The fundamentals of the economy are really strong, and it's really more tailwinds than headwinds. However, around the world, some economies are slowing. Not recessionary, but just their pace of growth is slowing. And we're so linked to other economies. That's what has people worried that the knock-on effect of China, for example, slowing could slow our economic growth.
So some people have said that President Trump is the reason for all of this. I'm skeptical of that, but listen to what the Washington Post editorial board said. The smart thing for President Trump to be doing right now would be to reassure markets that he has control over what he can control. He would be radiating confidence about the medium and long-term prospects of the U.S. economy. Can a president actually do that much?
Well, what's interesting, when the economy is as strong as ours is right now, the only thing that can mess it up is a policy blunder. And think about it. We had fiscal policy in the form of tax reform, terrific. But the Fed, that's policy. And going into the 116th Congress, not knowing whether or not the Democrats want to roll back regulations, that could potentially be a policy blunder. And the question is whether or not the trade war is a policy blunder.
Right.
So some of those things, forget about the tweets, but some of those things raise concern. And the way the market works, they worry about things. And this year, earnings growth was so strong, economic growth was so strong, they weren't worrying. Now everybody paused. The worry
set in. But I wanted you to talk about this because I read this in the Wall Street Journal about computerized trading. So among the traders today are computers that buy and sell on models and passive funds that seek only to hold the same securities as everyone else does. Meanwhile, bankers and brokers, once a ready source of buying and selling, they've retreated. Today, when the computers start buying, everyone buys. When they sell, everyone sells. And Mitch, I wanted you to explain to people just how computerized all of this is.
Incredibly. So in the article yesterday in the Journal, 85% of all trades are on autopilot. However, and by the way, so there are algorithms. Everyone's been blaming the market turmoil on algorithms. Treasury sector blamed it on algorithms. People program the algorithms. So one of the things they look for is economic data. So oil prices start to fall. Interest rates start to go up. Any uncertainty in a world, those are things that become triggers that potentially cause selling. And once they start selling, they continue to sell.
What about household debt? Is that something you're looking at?
I'm absolutely looking at household debt, and I'm probably more worried about it than most people are, just because that's
who you are.
That's who I am. But the fact of the matter is the sales, Christmas sales were fantastic. A lot of those were on credit cards. I do worry, even though balance sheets of the typical household in this country are way better now than they were, let's say, 10 years ago. I worry that when people get their statements in January, that could be a thing that gets people to stop.
Like, whoa.
And we are such a consumer-dependent economy. 70% of our economic growth, Dana, is from the consumer. And if the consumers pump the brakes because they look at their MasterCard or Visa American Express statement and they start to get worried, that's the thing that does worry me about 19 a little
Talking about consumers, the post-Christmas apps, the top 7, it was Amazon Alexa, YouTube, Snapchat, Instagram, Fortnite, of course that's big, Fitbit, and Netflix. What does that tell you about where consumers are thinking?
The third place, Fortnite's a perfect example. It's the third place. It's where all the kids want to be. One of the things that worry me about some of those things, I'm like Mr. Worry today, but one thing is all of the personal information that gets shared. I think that's going to be a huge issue, both sides of the aisle, very uncomfortable with privacy. I think it's a brave new world. I think we saw with some of the testimony that senators and congressmen and women do not really understand how it all works. I think that's going to be something that...
Do you think that there will be a move to try to figure out a way for us to be, I guess, paid, compensated for our data?
I think the first thing that's going to happen is whether or not you opt in or opt out. In most of these apps, you have to opt out. So let's say you're wearing something on your wrist like I am. You don't realize that all of your tagged information is being shared with whomever. And it's a great opportunity. I was explaining to my wife, Debbie, yesterday, it's an opportunity to sell you stuff. That is going to be a model that'll probably change. People are going to have to opt in for that as opposed to go through the arduous task of opting out. That's going to change the revenue model for a lot of those companies.
It's interesting. That it could be a big shift.
Totally.
All right, Mitch Rochelle, great to have you.
Happy
And tell
New Year,
Debbie
Dan.
hello for us.
I will.
Okay.